Hey everyone, in today's video I want to discuss about two stocks that were hot favorite of many investors in 2021. But of late, nobody is even talking about them. Stocks are CDSL and CAMS. These two stocks created a lot of buzz in the market in 2021 and everyone was convinced that CDSL and CAMS are two multibagger stocks for future and every investor should add them in the portfolio. And why not? Both companies were doing exceptionally well in terms of financials. CDSL profits jumped more than 200% between FY20 to FY22 and CAMS profit jumped 76% during the same period. And it was also reflected in their share price. CDSL share price jumped from COVID lows of 200 rupee to highs of 1600, generating nearly 8 times return in less than 2 years. And CAMS launched its IPO in September 20 at levels of 1230 and within a year, the stock was touching a high of 4000 rupee, generating more than 3x return in less than a year. However, it's been a year since CDSL's stock price has gone south and has corrected more than 30% from its highs, whereas CAMS stock price has corrected nearly 45% in last 16 months. So in this video, we'll try to understand what went wrong with CDSL and CAMS in 2022 and what we can expect from these stocks in 2023. But before we proceed, this video is only for educational purpose. I would request you all to do your research before investing your money. Alright, let's get started. To understand the reason for correction in CDSL and CAMS in 2022, it is very important to understand why these stocks jumped exponentially during COVID. The biggest reason was exponential rise of retail investors' participation in stock trading and mutual fund investment. During COVID, we saw a huge jump in stock market where Nifty zoomed from lows of 7,500 to 18,500 within 18 months. This growth was mainly fueled by crazy investment from FIs due to very low interest rates. So basically during COVID, the entire global economy was struggling due to lockdown. And to support the business, US Fed reduced the interest rate in US to near 0% and pumped billions of dollars in the economy. That resulted in huge amount of money inflow in Indian equity market from FIs. If I quantify that number, FI invested 2.1 lakh crore rupees during May 20 to March 21. As a result, the Indian stock market jumped exponentially. And when Indian market jumped that crazily, it attracted a lot of new investors in stock and mutual fund industry because majority of retail investors wanted to take benefit of this growing stock market. Moreover, COVID resulted in crazy lockdowns and majority of white-collar employees started working from home. So they were saving a lot of money. Now obviously this money had to be invested somewhere. During that time, FD returns fell down to levels of 5 to 6% and hence investors started to explore stocks and mutual fund investment. Also, lockdown also resulted in sharp growth in online learning via platforms like YouTube. That resulted in a lot of awareness about investment in Indian economy for long-term wealth creation. Now, a few years ago, investment in stocks and mutual fund was not that easy. You would need to physically reach out to the broker or mutual fund house for opening an account and it would take a few days of paperwork for the account opening. Basically, the entire process was a bit cumbersome. However, thanks to technology, many new age companies started offering investment in stocks and mutual funds with few clicks without any manual paperwork. So if I summarize, there was an exponential rise in retail investor participation in stock market and mutual fund investment due to sharp return from stock market from crazy liquidity, poor returns from fixed income instrument, growing awareness about stock and mutual fund investment, and smooth account opening process. All these factors directly benefited CAMS and CDSL. But why these factors directly benefited CAMS and CDSL? For that, we need to understand their business model. So CDSL is basically a depository where we can open Demat account and CDSL manages our Demat accounts. Now Demat accounts is mandatory for stock trading and investment. And there are only two depositories in entire country for Demat account opening, CDSL and CAMS. Just two companies for entire country with population of 1.4 billion people. So during COVID, Demat accounts in India jumped from 4 crore in March 20 to 10 crore in September 22. That's a growth of 150% in 2 years during COVID. And out of 10 crore Demat account, CDSL Demat account tally crossed the levels of 7 crore mark. Now I don't know how many of you understand how CDSL really makes money. So there are multiple ways CDSL makes money, including your annual maintenance charge where each listed security is required to pay a fixed fee to the depository. Then second revenue sources, transaction charges where the stockbroker has to pay a fixed amount to CDSL for processing the transaction. Then third major revenue is KYC service. Fourth is IPO and corporate actions like stock split, dividend, etc. And fifth source is other income like your account maintenance fee, e-voting fee, etc. Now the sharp jump in Demat account and crazy trading volume in 2021 resulted in exponential jump in CDSL profits that zoomed from 107 crore in FY20 to 312 crore in FY22. Basically, profits jumped more than 200% in 2 years. And during pre-COVID, CDSL was trading at ultra cheap level at levels of 200 rupee at a PE ratio of 20. And this exponential growth in CDSL earnings fueled with crazy liquidity resulted in 8 times jump in CDSL share price to levels of 1600 rupee within 2 years. As far as CAMS business is concerned, CAMS is an RTA, that is Registrar and Transfer Agent of Mutual Funds. So think this way. When you invest your money in mutual funds via SIP or lump sum mode, the mutual fund house role is to take your money and invest in the underlying security. They also take care of fund marketing and distribution, but they don't get involved in technical aspect. So when we invest our money in mutual fund, the entire process needs to be managed from back end. That's where CAMS comes into picture. It manages mutual fund transactions, processing, payments, dividends, brokerage calculation, reports generation, etc. Now during COVID period, mutual fund industry also exploded in India. The total AUM of mutual funds in India jumped from 24.7 lakh crore in FY20 to 38.4 lakh crore in FY22. And CAMS directly benefited from this sharp jump. As a result, CAMS profit zoomed from 164 crore in FY20 to 289 crore in FY22, generating 76% growth. And CAMS launched its IPO during September 20 at the peak of COVID. Since it was growing exponentially, every investor wanted a pie of CAMS business, and hence CAMS share price jumped from IPO price of 1230 to 4000 rupees, generating more than 3 times return within 1 year. And this crazy growth in share price of CAMS and CDSL made them expensive. At the peak, CDSL touched a PE ratio of 75 and CAMS touched a PE ratio of 80. Now situation started turning around in 2022. Due to low interest rates in the global market, the inflation started rising and it rose to record 40 years high in US. Eventually, central governments had to increase the interest rates to control this inflation. That resulted in sharp fall in liquidity from the stock market. During May 21 to December 22, FIs pulled investment worth 4.1 lakh crore from Indian market. Although domestic retail investors did provide a lot of support, but due to billions of dollars of pullback, the stock market started falling. And that directly impacted the trading volumes for stocks and mutual funds, and ultimately resulted in fall in earning growth for both CDSL and CAMS. CDSL quarter-on-quarter profit fell down from 86 crore in September 21 to 58 crore in June 22, and CAMS quarter-on-quarter profits fell down from 84 crore in June 21 to 62 crore in June 22. So earnings growth started falling, and on top of that, both stocks were trading at premium valuation. So investors started profit booking from both the stocks. As a result, in last 1 year, CDSL has fallen more than 30% and CAMS is down nearly 45% in last 15 months. Now let us try to understand what we can expect in 2023 and beyond. Since both CAMS and CDSL are in downtrend from more than a year now, it is really testing the patience level of investors. Now in the near term, for next few months, I don't expect sharp jump in share price of both CDSL and CAMS. Simple reason is, both businesses are linked with investors' participation in stock market and mutual funds. And since we are still not recovered from global slowdown, the trading volumes might not be very high. So there is no major trigger for next few months. The next major trigger would come when FIs start investing money back into the Indian market. That would ultimately result in jump in share price and would start generating more interest among traders and investors. That would result in more volume growth, more transaction, more Demat account opening, and hence more profits to both CDSL and CAMS. So we have to wait for a few more months. However, as far as long-term growth prospects are concerned for next 5, 10, 20 years, just ask yourself, will new Demat account openings stop or continue to grow? Will mutual fund transactions fall or will they grow in the future? I believe that it is just the beginning of stock and mutual fund investment in India. In fact, even the data is the same. As per reports, out of total household savings of Indians, only 5% of money flows into equity. 49% money still flows into property. And the mutual fund industry in India is just $0.5 trillion, whereas in US, this mutual fund industry is $25 trillion. That's nearly 50 times the size of Indian mutual fund industry. So it is just the beginning of stock and mutual fund investment in Indian market. Financialization of saving is one big trend in India that would benefit companies like CDSL and CAMS. As more and more people join white-collar jobs and economy get more formalized, people would continue to increase investment in stock market and mutual fund. And this would directly result in jump in both CDSL and CAMS profit. The simple reason is both CDSL and CAMS are leader in their respective market that has a duopoly. It means there are only two major companies in each sector. For Demat account, you have CDSL and NSDL. And for RTA, you have CAMS and KFintech. And within this duopoly market, both CDSL and CAMS are leader in their sector with big margin. For example, out of 10 crore Demat accounts opened in India till date, CDSL has more than 7 crore Demat account and NSDL has 2.9 crore Demat accounts. So CDSL has more than 2x Demat account than NSDL. Likewise, CAMS has nearly 70% market share in RTA segment, where out of top 5 mutual fund houses in India, 4 mutual fund houses are clients of CAMS and 10 out of top 15 mutual fund houses are clients of CAMS. And mind you, both companies are still small cap. CDSL commands a market cap of around 11,700 crore and CAMS has a market cap of around 10,800 crore. And being a leader in their segment, both companies are bound to grow. The best part is that there are high entry barrier in their business. CDSL was established in 1999 and CAMS was established in 1988. And it took them 25 to 30 years to become an established player in their sector. And both companies, being a tech-dominated platform, enjoys asset-light model with high profitability and high margin with negligible debt levels. CDSL operating margins are in the range of 50 to 60%, whereas CAMS margins are in the range of 40 to 50%. CDSL enjoys a ROE of greater than 30% and ROC of more than 40%, whereas CAMS enjoys ROE of more than 50% and ROC of more than 60%. And both companies are virtually debt-free. That's a perfect recipe of multibagger stock. So I'm really bullish on both the companies for next 10-20 years. In fact, CDSL and CAMS business is not just restricted to stocks and mutual funds. For example, CAMS also manages alternate investment accounts, PMS services, as well as e-insurance services. And recently, IRDAI has announced the mandatory dematerialization of insurance policy by 2023. This move will directly benefit both CAMS and CDSL. So the correction in both the stocks has made them attractive. Currently, CAMS is trading at levels of 2,220 with P ratio of around 40 and CDSL is trading at 1,117 with P ratio of 39. And even FIs and DIs are bullish on these stocks. If you look at the shareholding pattern of CAMS, FIs have increased the shareholding from 28.99% in March 22 to 29.28% and 33.31%. And DI's stake has increased from 13.25% in December 21 to 14.67, 14.7 and latest at 14.91%. For CDSL, FI holding increased from 9.16% in December 21 to 16.96% and has slightly reduced in last 2 quarters. And mutual fund holding is more or less same with slight fall in last quarter. So both FIs and DIs are holding significant shareholding in CAMS and CDSL, and especially after 45% correction, FIs and DIs have added CAMS in their portfolio. But for long term, I believe that both the stocks are SIP grade stocks. Any fall in these stocks in near term will only make them more attractive to accumulate for long term. So in this video, we discussed about CDSL and CAMS. Like I said, if you are a long-term investor and facing loss in CDSL or CAMS, you don't need to worry. The long-term future prospects are bright. In fact, the current correction can be used to accumulate both the stocks. So this is it for this video. If you find this analysis useful, do share it with your friends. And if you want to learn more about stock investment and money management, you can explore my course. And if you have any specific topic that you want me to discuss, then let me know in the comments. I'll see you in next video. Till then, take care.